All right, let's just start right here. Shout out to everybody in EYL University, all our earners. Shout out to our Red Panda family. Shout out to everybody watching Market Mondays. You are in for a treat. Shout out to my brother Ian. Last week, he put on a hell of a masterclass himself. So I just figured, you know what? Let's double down. Let's give these people 2 weeks of nonstop education to help their portfolios. So let's get this thing going. All right, let's just start right here. November was a month to remember for stocks. Now, when the month began, we came on Market Mondays, told you, look, November is the best month to invest in. We gave you a bunch of reasons why. Of course, election had a lot to do with that. Of course, the Fed rates had a lot to do with that. And of course, just being the month of November, we've talked about over the past 75 years, historically, this has been the best month for the Dow. It's been the best month for the S&P and the Nasdaq. And it held true. I mean, look at the numbers. The Dow jumped 7.5% in November, marking the best monthly performance in 2024. The average was 1.8% on average, less than 2%. It jumped 7.5%, right? Let's look at the S&P. It climbed 5.75% on average. That did 1.8% as well. And that's the best months, right? These are the best months of the year. 1.8% for the Dow, 1.8% for the S&P. They both, quadruple a number of times over what they usually do. And then look at the Nasdaq, right? So the Nasdaq closed at 6%, which is nothing to sneeze at. And we're talking about all the tech companies in there. And the average is 2.1%. So again, historically, we see that November is the best month to invest in. And so if you started in November, you're off to a great start to your investment journey. And if you got in October and September when the market was down, congratulations to you. You're starting to see some of the benefits of investing in a month that has a downturn. So shout out to both of you. As long as you made some money, we can't be mad at you. Here's what I want you to do, right? I want you to look for opportunity. This is very important, right? And so we're looking for stocks that have upcoming catalysts. And it's important that we have catalysts. And I don't say news because a lot of people will tell you, sell the news, sell the news, sell the news. And that's somewhat is true. But when you're dealing with futures and you were dealing with options, you kind of need a catalyst. And even with crypto, right? Like we saw what happened today with XRP. Sometimes you need a catalyst that's going to move price value and move some of the shares. And so examples is the earnings report. And this is the reason why at the end of Market Mondays, we always tell you who's going to be reporting, because these type of things could be catalysts. Now, that doesn't mean you trade on earnings or you trade after earnings. It just means that these are things that can move a stock, a share, an option, a futures contract. All right. Analyst revision. So when you hear JP, when you hear Bank of America, when you hear Goldman, when you hear any analyst that is revising a stock saying that it's going up or it's going down, Loop, financial, when you hear those type of things, these things can help move a stock up or down. They've revised because they've seen something in their guidance. There was a report that there was going to be a pullback. So those things can move it. New product announcements. We talk about this with Apple all the time. We talk about it with NVIDIA and Blackwell, what that's going to do looking like in 2025. So new products can help be a catalyst to move stock as well. Legislative changes. Do we have to say anything else about that? Look at what has happened with XRP now that there's going to be a new head of the SEC, right? And so these rules apply across investing, right? So legislative changes can do that. Lawsuits. We saw this with Live Nation, right? Live Nation is facing a lawsuit. We saw the stock pull back. But look at what Live Nation's done over the past 3 to 4 months. Steady climb as it's dealing with the lawsuit, still moving units, still moving tickets, still quote unquote has a monopoly, but that's neither here nor there. But that type of thing can help elevate or help a decline inside of stock. And mergers and acquisitions. And so we should see a lot of this over the past couple of years. We've kind of seen a pullback in it because of regulation, but with new Fed policies in there, with a new administration in, I would expect to see more mergers and acquisitions among companies because there won't be as many regulations getting in the way of that. So make sure that you pay attention to different type of catalysts. We're going to show you one that's happening in real time. This happened today. Check this out. All right, company we've talked about before here on Market Mondays, ASML. They rose as the company says new export curb control rules won't impact guidance. Now, this is a headline, but you probably pass this and you're like, Troy, what does that even mean? Like that, break this down for me, right? Because this means nothing to me if I look at this article. Well, here's what it means. It means that the U.S. government announced a stringent new export control targeting China's semiconductor sector. Key country, keyword, China's semiconductor sector. And so this is something that we're going to have to figure out with the trade war between America and China. But the new tariffs that are being proposed, we talked about Canada, we're going to talk about Mexico, China as well. But here's the thing. ASML is based in the Netherlands, right? So it's the world's only supplier of the, and we spoke about this, the EUV lithography machines equipment essential for manufacturing semiconductors. This is vital, right? We'll show you the graph. We talked about it a few months ago. But here's what happens. This is interesting. So the measures which restrict advanced chip making tools, memory technologies, and AI advanced related software could reshape global supply chains, which furthermore solidifies ASML's dominant position in advanced lithography systems. So they are already the leader as being the only supplier of this machine, but they're going to even be more relied upon based on the restrictions that are being put on some of these other countries. So this is key. Check this out. So we all know about Blackwell, right? NVIDIA's been talking about Blackwell. It's the next chip. It's the next generation of GPU, and it's sold out for 2025. But is anybody talking about Rubin? This is where my mind is focused. Right. So Rubin is the next generation. So after Blackwell, right, we have Hopper now, we got Blackwell coming, but after Blackwell, there's the Rubin GPU. That's the next NVIDIA GPU. Check this out though, right? So the chip will be manufactured by, well, you know who, Taiwan Semiconductor, using a 3-nanometer process and will use an HBM4 memory. Why is this important? Well, we talked about who can make the 3 nanometer. Said TSM can manufacture it, but there's only one company that can make a wafer that has that small of a semiconductor on it. And that's, yeah, you got it, ASML. So it's scheduled for mass production around this time next year and will be available for purchase in early 2026. And so what does that tell us about the future guidance of NVIDIA? Well, they're already thinking ahead in terms of the GPUs that they're going to produce. And TSM is already going to have a client base because if Blackwell sold out and people want to get ahead in terms of the AI race, they're going to have to use Rubin. That tells you TSM is going to have more business. Well, that's going to also tell you that ASML is going to have more business, right? We showed you this chart before. It's very simple, right? TSM has the fabs. They manufacture the chips for NVIDIA. They manufacture chips for AMD. Bro, we could put a bunch of the semiconductor companies in here and it would all be true. But look who's at the top of that food chain, y'all. We talked about this a couple months ago. It's not going anywhere. It's not going anywhere, right? So we got to look at this as an opportunity. And look at this chart, right? So like those are the fundamentals of why a company like this makes sense. But look at the technicals. If you look at this chart here, right, we're looking at ASML. Now this is today. You got the first arrow up here at the top. That is the 200-day trading, right? 200-day moving average, excuse me, right? So it's trading far below the 200-day. It's trading below than its 50-day. It's trading below its 20-day. It's actually just passing its 10. I think it's the 10-day moving average. So we're starting to see a slight uptrend over the past couple of weeks. But what has happened today? Well, look at that jump, $26 jump. I told you, this is a big boy heavyweight. This thing moves in very, very, very large volatile moves. So a $26 jump, a 4% gain is a really good day for a company like ASML. So when I go to the options chart, somebody's gonna be like, wait, well, Troy, when I go to the options chart, I look at the net change like you told me to, and it's all positive. Well, yeah, it's positive because of that catalyst, which was that news today. All right. You're going to see this in your net change. Now, I told you to look for the negative net change, but if we've been following this since the past few weeks, maybe a month or so, we've already put ourselves in position. Now, these are big boy heavyweights. When I say big boy heavyweights, I'm talking about these aren't contracts that are going to be cheap, right? So you're looking at over 5,000, 7,000. These are short term, right? So I'm less than a year out, which is I usually don't touch these because I like to have time as my most valuable asset. So this is out to September of next year. I'm already in this contract. So I'm going to show you what this happened today with this. Let's check this out. So we're in it. And in a day, we saw a 17% gain, right? This isn't theory. This is actual facts. That's the contract that I'm in. If you were in my class, I showed you this. You've been following this with me. So this happened today. We're up 17%. I don't think this is going to be slowing down anytime soon based on what we saw in terms of what they're going to be producing, the lack of restrictions and regulations that's not going to be placed on them. I keep my eye on ASML if I'm you. If not, put in your watch list. This is a company that we got to keep an eye on for sure. Plays too much of a major role in the space. All right, but look at this. I know Ian gonna be mad at me. So we've been talking about this on Market Mondays, and I kept saying, hey, you know, they're just not gonna let some of these companies die. Just not gonna let them, right? It just makes too much sense to keep some of these companies alive. And so Supermicro was the darling of the first half of this year. I mean, people had so much gain for a company that we didn't know anything about maybe 2 years ago. Starting to see these gains, and then we saw a crash. And we saw, you know, there might have been some fraud inside of the banking. There might have been some fraud inside of the reporting. There was some talk about them potentially losing their most strategic partner, which is NVIDIA. And we talked about the role of NVIDIA and how it's going to get to $4 trillion and the race to that. And so we've been watching this. And then the news comes out in mid-October and it drops again that they potentially could be delisted. And I kept saying to myself, okay, let's circle November 15th on our calendars. And why was that? Well, November 15th was the deadline that they had to hand in their 10K report to show their earnings and to show their actual financial statements. Well, they got an extension on that and they didn't get delisted. So I'm like, okay, that's a good sign. The next date I said we should circle is November 25th. And why? Well, there's a reason why. NVIDIA was reporting. Now, if that's one of their most strategic partnerships, which has the most upside, I wanted to see what Jensen would say about this company that was potentially about to be delisted, that potentially had some fraud inside of its financial numbers. What would he say about it? And so these are the things that we're looking at in terms of catalysts and in terms of opportunities. And so first thing was, has the stock bottomed out? Well, yeah, the stock has dropped down below 65% for the year. So even on our metric of saying, hey, has this dropped over 40%? It's far surpassed that, right? That's on the stock side. On the option side, has it dropped below 40%? Even more so. All right. Has the uncertainty cleared? Well, we listened to Jensen. We saw that it didn't get delisted. In fact, what did Jensen say? Well, he said that it's been a very strategic partnership and they've been a great partner and they can kind of continue to see themselves working with them. That's a good sign. That was a good sign for me. I said, all right, this is great, right? If we're looking at a company that has fallen, check. Option has fallen, check. Does it have a viable relationship? Check. Is there an opportunity for a small growth coming here? Check. I think so, right? So we look at their chart again. Look at the top up there. Right now, this is after the 10-to-1 split where it was trading over $1,000. So let's say it capped out about $1,200. And look at it falling all the way down here. It's about $200, right? And so you can see that black line going across at the top. That's its 200-day. So the 200-day sitting just above about $70, which obviously 10-to-1 traded would have been about $700. So we're far below that. You look at its 50 days trading just under 40, and then you see the 10 and the 20-day right around $32 to $33. This tells me opportunity. You look at the RSI rating, it's very low. And then you start to see an uptick around November 15th. All right. So we can look all the way at the bottom at that blue where it says November 15th. We start to see a blue uptick. Now, why did we say circle that date on the calendar? Well, they didn't get delisted. Right. So here goes the first catalyst. Boom. Right. And then look what happens toward the end of the month again, the 25th. Right. NVIDIA doesn't say that they are no longer working with Supermicro. Here goes another catalyst. And so now they're saying that, let's go back to this first slide. They're saying that they had an independent conductor, right? Ernst & Young was doing their books before as an auditor. They had an independent committee come in and they found no evidence of misconduct. 30% gain, another catalyst. But it would behoove me if I didn't give credit to my earners. So shout out to Stephanie. I hope she's watching. I'm pretty sure she's watching. Shout out to Stephanie. Shout out to D. Everybody inside the investment club, all our earners. Stephanie was telling us, right? She's been telling us inside the classes, y'all. She's been saying it. That's why you got to attend these classes. She's been saying it. When it was down at $21, she said, here's the opportunity. Shout out to Steph. Steph, I was watching. I told you sometimes I just come into classes. I don't say who I am. I just want to see what's going on. And so I was like, yo, she's got it. She's got it. And so shout out to all the earners. I saw some people that went over 100%. Some people went over 150%. Most important thing is that, yes, here's the information. But look, these are people inside of EYL University getting the job done. So shout out to Steph on this call for Super Micro because we're up over 100%. And so I said, all right, let me do another one so that everybody in Market Mondays can now see where we're at. So this is my Super Micro play. I did this earlier today, midday. And so my day change is up. I'm up 6%, right? So the first number is me. The second number is what actually happened today. So it went up almost 56% today. I caught it toward the midday. We were actually doing some taping, so I missed a little bit of it. But I want you to notice how far out I am, right? I'm out to January 27, right? We're in the year 2024. I'm out to January of 2027 for a $50 call, which means I'm not far from the money because right now Super Micro was at what, $42 today, which is pretty good for it. It's having a nice rebound. So we're gonna watch this closely, right? This is one of those companies like, yo, if Nvidia continues to grow and it's saying that it's still partnering with it, I see this one still moving up a little bit more. Even if it doesn't get back to its all-time high, that's fine. There's still some growth inside this company. All right. So shout out to everybody that executed on that. All right, so here's what we're looking for, right? I went out to 2027, but that doesn't mean you have to, right? Sometimes when you go out further, the contracts are a little bit more expensive, which is understandable. So if you're going to do short term, right, which means you're going to do anything between a week, which I don't recommend. That's strictly for live men, not for freshmen, right? If you're going to do something out for a month, maybe 6-month range, here's some of the things I want you to do. Write these down, okay? I want you to take profits early on short-term options, right? Whether it's a 10% gain, 25% gain, 50% gain, take profit. Why? These things move so quickly. The volatility, right? The implied volatility, the theta, the Greeks, they won't work in your favors on some of these short terms. And I want people to lose money. I don't want you to lose money. The game is supposed to be played so that you can make money. Okay. Next thing is set stop losses based on the percent of the option premium. So where's my percentage where I'm out at? Right. I told everybody it depends on my company, but I'm usually at 30%. If I'm down 30, all right, I might have got in too early, might not have been enough of a catalyst here. Maybe something happened that I couldn't see forecoming. But some companies I'll go to 50. Now I've done 50% with Nvidia. That worked out in my favor. That same call that was down 50% ended up closing out at over 2,000%, right? And y'all saw that was in part of our June class. All right. So on the short-term options, they're extremely sensitive to implied volatility changes. So just be super aware of that, right? So if you're doing short-term, these are some of those 3 golden rules that I want you to make sure that you're doing. We don't want you to lose money. You're in this game to gain money. All right. Right. So that's what you're looking out for. Here's what I don't want you to do. Like, please don't do this. All right. Never hold short-term out the money options into expiration week. And so what does that mean? That means if my call is expiring December 6th, this Friday, it shouldn't be in my portfolio anymore. I should have got rid of that. I should have took my profit and we should have moved on. I gave an example in the class where I was in the Dell contract, right? And I was like, hey, they're about to report earnings next week. I'm out of here, right? I didn't wait. And now we saw Dell pull back. Still believe in Dell. Thinks it's going to play a vital role in terms of the data center infrastructure. But I'm like, this is too short term. Let me get my profit. Let me get out. So please make sure that if you are in a contract, that if it's the week of, you're not in it anymore. You've taken your profit, or you said, you know what, this is a loss. We'll cut our losses and we'll get out of here. All right. Please don't do that. Holding through earnings, unless specifically playing earnings. Now, playing earnings can be beneficial. Sometimes it can work. Sometimes it doesn't. Depends on the company. Depends on the future guidance of that company. That's why using as much research as possible. So we use Estimize, we use Bearings, we use Seeking Alpha. We want to get as much information as possible. So we make sure that everything that could work in our favor does, especially when we're reporting earnings. Please, please, please. It's a delicate game. Be careful when you do that. And then please don't do this. If you don't do any of these things, but please don't do this. Averaging down on losing short-term options, right? So like when you're trading stock and we're talking about dollar cost averaging, that makes a lot of sense, right? You're going to put money in every month. If the stock goes up, you're making money. If the stock goes down, you're still on a schedule where you're putting money into an investment that you're going to keep long-term. You are not keeping options long-term. So you should not be doubling down or averaging down on some of these especially short-term options, especially, right? This is not, I'm down, let me double down. Please don't do that. That's not this. All right. So you're not doing these things. Here's what I want you to keep note of. And this is happening this month, right? So quadruple witching, right? So quadruple witching refers to the simultaneous expiration of stock index futures, stock index options, stock options, and single stock futures derivatives contracts 4 times a year. So this is going to happen 4 times a year, right? It's going to happen in March. It's going to happen in June. It's going to happen in September. And it's going to happen in December. Why those times? Because those are the last months of each quarter. So the first quarter, right, is going to end in March. Second quarter is going to end in June. Third quarter is going to end in September. And obviously the fourth quarter is going to end in December. And it's going to happen the third Friday of each of those months, right? And so if we're looking at our calendars and we're looking at the third Friday of this month, it's going to be December 20th. So that's going to be quadruple witching. What happens there? You're going to see a lot of contracts that expire. People are going to take profits, or people are going to exercise and try to roll over those contracts into the next year. Now, December is an interesting time because people will look and say, hey, I have profit here. My contract may be expiring, but I want to roll over for tax purposes. So you got to be mindful of these things, right? Tax strategy is important when you're investing. So knowing when quadruple witching is happening, because a lot of people will say, hey, it's going to be volatile, or we'll see a pullback. Well, sometimes you might see more money being poured into it, especially at the end of the year. So we said November was the best year to invest in, but December is pretty good as well, right? Those 3 months of November, December, January have been pretty great historically. And so we're in for another pretty good month when we talk in terms of November. They always talk about the Santa Claus rally. There's some talks about Fed interest rates might be cut again in December. So these are all catalysts that we're looking at to say, okay, we have an opportunity to see some positive movement in some of our entries. All right, so what would we locked in on? Well, obviously the semis, right? TSM is still leading the portfolio. NVIDIA, of course, and there's some new calls that I'm going to be making on that shortly. ASML for sure. Micron, when we talk about opportunity, I could have did this on Micron. Micron is going to be in this space, right? If we look at the CHIPS Act and where the money was allocated, and if you see, Intel just had their money allocated last week. What happened today? They got a new CEO. They got rid of their CEO. Micron also received money from the CHIPS Act. I would encourage you to go look it up. Micron's not going anywhere, especially being here and the reliance on import and export being at the forefront of the conversations when it comes to trade. Keep an eye on Micron. There's opportunities there. And those ones that are starred, those are next to be added. Well, Kava's in the portfolio. And if you missed our last class, go check it out. Kava's in the portfolio. VRT and VST. Oh, my gosh. Go look at those charts. Go look at their performance for this year. And there's still room to grow. So these are ones that are going to be added to the portfolio. If not, in the next few weeks, definitely at the top of the year as we look for some opportunities for some pullbacks. And we'll give you the numbers for those as well inside of the university. I appreciate y'all. Let's get back to business. Love is love. Let's go make some money.